on the subject matter conformity. On the subject matter conformity with the criteria. On the subject matter conformity with the full stop. Can I repeat? Someone follow? You have said assurance engagement. It is an engagement whereby a practitioner evaluates, examines, or measures the subject matter and forms a conclusion to raise the confidence of the intended user on the subject matter conformity with the criteria. Full stop. Meaning, in short, what we are saying, it is the process of examination of the subject matter. Why are you examining the subject matter? You want to confirm whether this subject matter conforms to a certain criteria. Remember, we have said criteria. This is the benchmark. It is this accounting standard that we expect the financial statement and books of account should conform to them. Now, meaning we have to examine whether the subject matter is conformity with the criteria in order to increase the degree of confidence of the intended users of that subject matter by giving either reasonable assurance or limited assurance. Now, let's have subtopic, objective of assurance engagement. Objective of assurance engagement. Objective of assurance engagement. Objective of assurance engagement. Now, before we put anything down, somebody follow. What is the objective of assurance engagement? Now, the objective of assurance engagement, please, we are not writing, I'm explaining, then we write. The objective of assurance engagement is to help the auditor or the practitioner to issue either reasonable assurance or a limited assurance. Now, when we talk of reasonable assurance, this refers to a positive form of assurance or a high level form of assurance that an auditor gives after he has audited historical financial information. Somebody follow? Meaning, this level of assurance is a positive form of assurance or a high level form of assurance that auditor gives after he has audited historical financial information. The number two, with limited assurance, this refers to a negative form of assurance or a low level form of assurance that an auditor gives after he has audited a PF5, that is prospective financial information. Now, listen some. I remember I gave Vincent this explanation, this example. Assuming your audited financial year 2018, 2019, 2019, 2020, 2020, 2021, or maybe 2021, 2022. If you're auditing this financial information, this financial date, you can conclude, if you're auditing financial 2018, 19, 19, 20, 2021, and 2021, 2022, then you can tell people that you are auditing historical financial information, meaning historical financial information. This refers to any information that is available in the public domain. Meaning, historical financial information, this refers to information of activities that has already taken place. Meaning, if you want to confirm those activities, those information is available, you can confirm. Now, let's assume you are auditing financial year 2022, 2023. No, actually, let's pick from 2023, 2024. Now, let's assume historical, you also worked on 2022, 2023, because already we have done that. Now, assuming now you are auditing again 2023, 2024, 2024, 2025, or maybe 2030, 2031. Now, all this information relates to information of activity that has not taken place. Then you can conclude that you're working on a PFI. Meaning PFI, This refers to any information of activities that have not taken place but will take place in future. Meaning we are dealing with information that is based on assumption. Meaning a PFI, this refers to any information that is based on assumptions of activities that have not taken place now, but we are assuming they will take place in the future. Meaning, if you are using such information that is future oriented, then you can tell people that you are using a PFI. At this point, you can give a limited form of assurance, or a negative form of assurance, or a low level form of assurance. In the examination scenario, the examiner will talk of low level of assurance. You will not talk of limited assurance. Or other cases, we talk of maybe a negative form of assurance. Or other cases, we talk of a limited form of assurance. You just need to understand that is the same thing. Meaning, you can give a limited form of assurance, or a negative form of assurance, or a low level form of assurance, as long as you are dealing with a BFI, that is prospective financial information. Now, if you have audited historical financial information, then you have seen at this point, you are supposed to issue a reasonable form of assurance, or a positive form of assurance, or a high level form of assurance. Remember, we give reasonable assurance if the information is available in the public domain. We give a PFI, limited form of assurance, if the information that you're working on is only available, but it is futuristic in nature, meaning it's a PFI, meaning any information that is based on assumption. Let's put that information down. Objective of assurance engagement. And that note, there are two types of assurance engagement. There are two types of assurance engagement. A practitioner is permitted to perform. There are two types of assurance engagement. A practitioner is permitted to perform, i.e., reasonable assurance engagement, i.e., reasonable assurance engagement, and a limited assurance engagement, and a limited assurance engagement, and a limited assurance engagement. Now, under new line, the objective of a reasonable assurance engagement, the objective of reasonable assurance engagement is to reduce assurance engagement risk, is to reduce assurance engagement risk, is to reduce assurance engagement risk to an acceptably low level, to an acceptably low level in the circumstance. I repeat, the objective of reasonable assurance engagement is a reduction of assurance engagement risk to an acceptably low level in the circumstance. Full stop. And a new line. The objective of a limited assurance engagement, the objective of limited assurance engagement, the objective of a limited assurance engagement is a reduction of assurance engagement risk, is a reduction of assurance engagement risk to a level that is acceptable, to a level that is acceptable, to a level that is acceptable in the circumstance, to a level that is acceptable in the circumstance, as a basis of a negative form of expression, as a basis of a negative form of expression of the practitioner's conclusion, of the practitioner's conclusion. Now, allow me to explain something there. We have said,
pardon, Mani.
Yes, I pardon. the objective of a limited assurance engagement, the objective of a limited assurance engagement is a reduction of assurance engagement risk, is a reduction of assurance engagement risk to a level that is acceptable, to a level that is acceptable in the circumstance, to a level that is acceptable in the circumstance as a basis of a negative form of expression, as a basis of a negative form of expression of the practitioner's conclusion, of the practitioner's conclusion, of the practitioner's conclusion. Full stop. Now, I want to show you something. We have said we have two forms of assurance that you can give, whereby we have said we have reasonable, and number two, we have said we have limited. Now, we also have another assurance that I've not discussed of, that is absolute form of assurance, absolute. Now, when you talk of absolute assurance, this refers to a 100% form of assurance. Now, 100% form of assurance, this is whereby you are trying to tell people that everything in that organization is correct, is perfect. Now, listen somebody. There isn't any way as an auditor you can give 100% form of assurance, because everything within the organization cannot be perfect. Probably you might not inquire all the details that you want from everybody within the organization. You'll be forced maybe to talk to few people. Number two, if you're being given number of documents, you might not find yourself auditing every document. Meaning, if assuming that you'll be given some invoices here, I've got these 9 invoices here. I have invoice 1, 2, 4, 5, 6, 7, 8, 9. It's possible this document can be signed. This document again can be also signed. And this document can also be signed. But it's also possible that this document might not be signed. This might not be signed. This might not be signed. This might not be signed. And probably this is signed. For the purpose of auditing, assuming you have these 9 invoices, because of time and other factors, you might not be able to audit everything in that organization. Meaning, this is your total population. Out of your total population, you can decide to come up with your sample size. Now, out of your sample size, you might pick not 1, you pick not 5, and you pick not 9. If you pick those 3 invoices for the purpose of audit, the assumption would be the characteristic behavior that you are going to get from those 3 invoices will be a representative of the total population. Meaning, from our example, if these 3 invoices are signed, our assumption will be all the total invoices in that population is signed. But remember, you've just picked 3 out of 9. Meaning, you have done what we call selective testing. Meaning, if I pick from these 3 invoices, my assumption will be that everything is perfect. But in natural sense, we have just picked less. We have not picked 100%. And that's why we have said we give a reasonable form of assurance or a limited form of assurance in order to reduce what we call an engagement risk. Meaning, engagement risk, it is that susceptibility or the possibility that the auditor is like to express inappropriate form of assurance. You are not going to tell people that everything is signed. When in actual sense, we have seen we have other documents that are not signed. So we are unable to see that some of the documents are not signed by the fact that we did selective testing and not census. And by that fact, then we see an auditor does not give absolute assurance, they give either reasonable assurance or limited in order to reduce the engagement risk. That's what we have just discussed there. meaning engagement risk, it is that possibility that you as an author, you are likely to express inappropriate, audit, or opinion. Now let's put something down. Let's have something down. Subtopic, elements of assurance engagement. Elements of assurance engagement. Elements of assurance engagement. Now, on that note, remember the subtopic, elements of assurance engagement. On that note, the following elements of assurance engagement, differentiates between the following elements of assurance engagement, differentiates between an assurance engagement, and non-assurance engagement. Number one, three-party involving practitioner, comma, the responsible party, and the intended user. Three-party involving the practitioner, the responsible party, and the intended user. Number two, an appropriate subject matter. Number three, suitable criteria. Number four, sufficient appropriate evidence. For the purpose of understanding, last week we devised an acronym that is CREST. So for purpose of remembering, always remember CREST. That is the criteria, report, evidence, subject matter, and three-party relationship. Now let's do number one. Number one, three-party relationship. And that note, an assurance engagement involves three separate parties. i.e. practitioner, comma, responsible party, and the intended users. Now let's start with number A, a practitioner. And that note, the term practitioner means a professional in public practice. I.e. professional accountant. Number B, responsible party. And that note is the person or persons who, semicolon, number one, is responsible for the subject matter, and number B is responsible for the subject matter information, You can put into bracket assertions, and may be responsible for the subject matter, and may be responsible for the subject matter. I repeat that point, kindly follow. We have said is responsible for the subject matter information, into bracket, assertion, and may be responsible for the subject matter, and may be responsible for the subject matter. Full stop. Number C, intended users. Intended users. Intended users. Intended users. And that note, are the persons or class of persons for whom the practitioner prepares the assurance report, are the persons or class of persons for whom the practitioner prepares the assurance report. The practitioner prepares the assurance report. The responsible party can be one of the intended users, but not the only one. Full stop. Now, that is number one, the three-party relationship. And please remember, we are talking of three-party relationship, not third-party. So if you write an exam, third-party relationship, understand you get it wrong. You have to remember three-party relationship. Let's go to number two, subject matter. Number two, subject matter. Remember, we have said subject matter, this refers to the phenomenon or the item that is being evaluated or the item that is being audited. That is the subject matter. We have said we can have internal control system as subject matter. We can also have the books of account and financial statement as subject matter. And of course, we can have processes as subject matter. So let's put that down, subject matter. And that note, the subject matter and the subject matter information, the subject matter and subject matter information, the subject matter and subject matter information of an assurance engagement can take many forms. The subject matter and subject matter information of an assurance engagement can take many forms. I.e., number one, financial performance stroke conditions. Financial performance stroke conditions. Subject matter. Number one, financial performance stroke conditions. Financial performance stroke conditions. You can put an hyphen, we say something small, i.e. HFI and PFI, i.e. HFI and PFI. Remember, we have said HFI, this is historical financial information, whereby we have said historical financial information is that information that is available in the public domain, meaning information of activities that has already taken place. Then number two, we have said we have PFI. We have said PFI. This refers to any information that is based on assumptions of activities that have not taken place, but we are seeing this activity take place in future. So i.e. HFI and PFI, for which the subject matter information, maybe the recognition, comma, measurement, presentation, and the disclosures in the financial statement. statement. Meaning, basically, we are talking of the financial statement and books of account, whereby we are interested on the disclosures in the financial statement, meaning we are working on assertion. Remember, when you talk of assertion, this refers to a statement or a representation made by the management when deciding to include or to exclude an item in the financial statement. Now, we have three categories of financial statement assertions, whereby we can have assertions about classes of transaction. Now, classes of transaction, we're referring to all the items in the income statement. Then number two, we have assertions about account balances. Now, account balances, we are referring to all the items in the balance sheet. And number three, we talk of assertions about presentation and disclosure. So we have those three categories of financial statements, assertions. Of course, that will be coming in our subsequent topics there. But it's very important for you to understand that when you're working on financial performance so conditions, we are referring to the outcome in the financial statement and the books of account. That is number one. Number two, non-financial performance stroke conditions. Non-financial performance stroke conditions. Non-financial performance stroke conditions. Non-financial performance stroke condition, put an hyphen, we say something small. Performance of an entity, i.e. performance of an entity, i.e. performance of an entity, performance of an entity for which the subject matter information, for which the subject matter information, for which the subject matter information may be indicators of efficiency and effectiveness. May be indicators of efficiency and effectiveness. May be indicators of efficiency and effectiveness. Number three, physical characteristics. Physical characteristics. Number three are physical characteristics. Physical characteristic, put on my friend. I.e. capacity of a facility, capacity of a facility, capacity of a facility for which the subject matter information, for which the subject matter information may be a specific document, may be a specific document, may be a specific document. Number four, system and processes. Systems and processes. Systems and processes, i.e. an entity's internal control systems, i.e. an entity's internal control systems, an entity's internal control system, or IT systems, or IT systems, or IT systems for which the subject matter information, may be assertions about the effectiveness. May be assertions about the effectiveness. May be assertions about the effectiveness. Number five, behavior. Number five, behavior. Number five, behavior. Number five, behavior. Put an FN, i.e. corporate governance, comma, compliance with human relations practices, human resource practices, for which the subject matter information, maybe a statement of compliance, maybe a statement of compliance, or statement of effectiveness, or statement of effectiveness, or a statement of effectiveness. And that is our number 2. Remember, number 1, we discussed the part relationship. Number 2, we have said we have the subject matter. Now remember, subject matter is very, very important for you to understand. We have said under subject matter, we can have the financial statement. That's when we are talking about financial performance, stock conditions. We can have non-financial performance, whereby we are interested on the efficiency and effectiveness of the organization. We have the physical characteristics, the systems of the organization, whereby we have said we can have the IT systems, we can have the internal control systems. And of course, number 5, we have said we have behaviors. Now let's go to number 3. Number 3, criteria. Number 3, criteria. Number 3, criteria. Number 3, criteria. Remember, we said criteria. This refers to the benchmarks or the accounting standards that we expect the financial statement should conform to them. Meaning, when you are doing your assignment as an auditor, you are trying to confirm the subject matter that we have just discussed there above. Do they conform to the criteria that we are going to work on now? So number 3, let's go to criteria. Now, that note, these are the benchmarks used to evaluate or measure. These are the benchmarks used to evaluate or measure the subject matter. These are the benchmarks used to evaluate or measure the subject matter, including where relevant, those for presentation and disclosure, including where relevant, those for presentation and disclosure. Next point, criteria can be formal. Criteria can be formal. Criteria can be formal, i.e., in the preparation of financial statement, the criteria may be IFRS. The criteria may be IFRS, IPSAS, IFRS, IPSAS, IFRS, IPSAS, IFRS, IPSAS, comma, IAS, etc, etc, IAS, etc, etc. Now let's have a note, NB, characteristics of a suitable criteria. Characteristics of suitable criteria. Characteristics of suitable criteria. Characteristics of suitable criteria. Number 1, relevance. Number 1, relevance. Number 1, relevance, put an FN. Should assist in decision making. Should assist in decision making by the intended users. Should assist in decision making by the intended users. Number 2, completeness. Number 2, completeness. Completeness. Should not omit relevant factors. Should not omit relevant factors that could be expected to affect decision. That could be expected to affect decisions. Repeat, completeness should not omit relevant factors that could be expected to affect decision. Number 3, reliability. Number 3, reliability. Put an FN. Reliable criteria allows reasonable, consistent measurement Reliable criteria allows reasonable, consistent measurement. Reliable criteria allows reasonable, consistent measurement or evaluation of the underlying subject matter. Or evaluation of underlying subject matter. Or evaluation of underlying subject matter. Number next, neutrality. Neutrality. Neutrality should be free from biasness. Should be free from biasness. Should be free from biasness. And the last one, understandability. Understandability. Understandability should be well understood by the intended users. Should be well understood by the intended users. Should be well understood by the intended users. Now let's go to number 4, evidence. Number 4, evidence. Evidence. Now remember, I've told you, when we talk about evidence here, we must ensure that we have sufficient appropriate evidence. Now, our evidence should be, we must have sufficient appropriate evidence. Now, I've told you, when talk of sufficiency, this is whereby we are interested on the quantity of the information that you have gained. Meaning, you want to confirm, before I express either reasonable assurance or limited, do I have enough evidence for the purpose of supporting that evidence there? Now, how do we ensure that we have enough evidence? We can only conclude that we have enough evidence if it can afford to clear the professional doubt that you might have as an auditor. Meaning, if you feel that possibly maybe there is possibility of teaming and learning within the organization, you can only conclude that you have enough evidence if you can clear up that professional doubt that you might have as an auditor. Now, for you to clear this, for you to have enough evidence, then you have to grow what we call professional skepticism, that something is likely to be wrong. Now, professional skepticism, this helps you to increase your sample size. It also helps you to consider the audit procedures or techniques to use. Meaning, if you use the right sample size and you use the right audit procedure, that means you will have enough evidence in terms of sufficiency that can clear the professional doubt that you might have as an auditor. Now, appropriateness here, this is whereby we have to consider, number 1, this evidence, is it relevant? And number 2, we have to consider the reliability. Now, relevance here, this is what we want to confirm. Are we providing this information as at when it is required? Are we giving this information at the right time? Relevant. Reliability, this is where we are trying to consider the source. Where am I getting this information from? Am I getting this information from an original document, or is it a photocopy? Am I getting this information orally, or is it written evidence? I want to confirm this evidence. Am I getting this evidence directly, or am I getting this information indirectly? I also need to consider, am I getting this information from an independent source or not? Now, if I'm getting this information from within the organization, is the internal control system of this organization strong or weak? Meaning, when I'm working on those activities, then I'm trying to increase the credibility of the evidence that I have by considering the reliability of the source where I'm getting this information from. Meaning, when we talk of evidence, we must ensure that we have sufficient appropriate evidence. Now, for us to get sufficient appropriate evidence, that we have said, we have to consider the element of professional skepticism in order to ensure that we increase our sample size and we also consider the right techniques that we are supposed to use. Now, let's put that information down. Evidence. Now, on that note, the practitioner plans and performs an assurance engagement. The practitioner plans and performs an assurance engagement with an attitude of professional skepticism. With an attitude of professional skepticism to obtain sufficient appropriate evidence. To obtain sufficient appropriate evidence about whether the subject matter information is free from material misstatement. About whether the subject matter information is free from material misstatement. The practitioner considers materiality. Next point. The practitioner considers materiality, comma, assurance engagement risk, and the quantity and the quality of available evidence. And the quantity and the quality of available evidence. Let's have an NB. NB, professional skepticism. Professional skepticism. Professional skepticism. And that note, it is the attitude of questioning mind. It is the attitude of questioning mind. It is the attitude of questioning mind that requires the practitioner to conclude that the subject matter information may be materially misstated in the circumstances. May be materially misstated in the circumstances. May be materially misstated in the circumstances. Next point. The attitude allows the practitioner to conduct a critical assessment. The attitude allows the practitioner to conduct a critical assessment and gather sufficient evidence to form a conclusion. Note 2, another NB, assurance engagement risk. Assurance engagement risk. And that note is the risk that the practitioner expresses. An inappropriate conclusion, on whether the subject matter information is materially misstated. Full stop. The objective of assurance engagement is to reduce assurance engagement risk. The objective of assurance engagement is to reduce assurance engagement risk to acceptably low level. Then let's go to the last element. Assurance.
William, can you repeat the last statement?
Yes, I've said the objective of assurance engagement The objective of assurance engagement is to reduce assurance engagement risk, to acceptably low level. To acceptably low level. To acceptably low level. Full stop. Assurance report. Assurance report. Now, we have seen assurance report. This is the ultimate product. Actually, it is the document that differentiates the auditor's assignment from any other report. Meaning, assurance report, this is the document that differentiates the auditor's report from any other report that we can get outside there. Meaning, after we have gathered sufficient appropriate evidence about the subject matter, that outcome we can put it in a written report. And that note, we are writing. The practitioner provides a written report containing a conclusion. The practitioner provides a written report containing a conclusion. The practitioner provides a written report containing a conclusion that conveys the assurance obtained. That conveys the assurance obtained about the subject matter information. About the subject matter information. About the subject matter information. Full stop. Reasonable assurance is a concept related to accumulating evidence. Reasonable assurance is a concept related to accumulating evidence. Reasonable assurance is a concept related to accumulating evidence necessary for the practitioner. Necessary for the practitioner to conclude in relation to the subject matter. To conclude in relation to the subject matter information. To conclude in relation to the subject matter information. Full stop. In relation to the subject matter information. Now, listen somebody. We have said and we have agreed that we have two forms of assurances that we can give, whereby we have said we can give reasonable assurance or we can give an absolute assurance. Now, we can give reasonable assurance or we can give limited assurance. So we have said we can have reasonable or we can have limited. We have agreed this is a negative form of assurance or a low level form of assurance. And you have said this is a positive form of assurance or a high level form of assurance. Then we have also indicated that we can have absolute form of assurance, which you have said this is 100% form of assurance, whereby we have said auditors do not give 100% form of assurance. Because we have said we need to give either reasonable or limited so that we can reduce our engagement risk. Whereby we have said engagement risk, this is the susceptibility or the possibility that you as an auditor, you are likely to express inappropriate audit conclusion. So we have said we can't give 100% form of assurance. So I have somewhere subtopic, reasons why, subtopic, reasons why, please, reasons why auditors give reasonable assurance and not absolute assurance. Reasons why auditors give reasonable assurance and not absolute assurance. Reasons why authors give reasonable assurance and not absolute assurance. I remember I indicated one when I was explaining some inferences whereby we said we have because of selective testing. Please note that as a first point. Use of selective testing. The use of selective testing. The use of selective testing. Now, selective testing, this one we have said that when you're auditing, you are doing sampling. You are picking few items from the total population and generalize that characteristic behavior to be a representative of the total population. By that fact, then you can tell people that everything is 100% correct. Number two, we have inherent limitations of internal controls. Inherent limitations of ICS. Inherent limitations of ICS. Now, when talk of ICS or internal control system, this refers to financial and non-financial controls within an organization. Meaning, we have some policies and procedures within the organization that have been set. That is internal control system. Now, we can have internal control system in place, yes, but there are some limitations, inherent limitations that limit the internal control system from achieving their objective optimally. Meaning, we can have internal control system whereby we have control activities, but still people can collude to bypass controls. Meaning, if we have maybe a payment mechanism whereby we can have this one person who writes a check, we have another person who prepares the invoices, and of course, we have somebody who prepares the payment voucher. The three of them can decide to collude, meaning the internal control system could be there, yes, but still employees can collude to commit a fraud within the organization. And by that fact, you can't give 100% form of assurance. Sometimes because of urgency, people tend to bypass controls. Meaning, instead of following a procedure, maybe I want to do purchasing, whereby for me to do a purchasing or procurement, I need to ensure that I raise an RQ, that is a requisition. Then from there, I raise an LPU. Then from there, we need to have the GDN. Then from there, we can have a GRN. Then from there, we can have an invoice from which we can do a payment. Meaning, if this is the procedure that we are supposed to follow when we are doing procurement process, someone can decide just to make a telephone call and somebody will deliver an invoice plus the physical goods. Meaning, I'm trying to bypass controls. And by that fact, when I'm coming into audit, because of such inherent limitation in the control system, there is it anyway I can give absolute assurance. So note number two, please, where you were writing, note number two, inherent limitations of internal control system. Inherent limitations of internal control system. Number three, the fact that much of evidence available to the practitioner, is persuasive rather than conclusive. The fact that much of evidence available to the practitioner is persuasive rather than conclusive. Number four, the use of judgment in gathering and evaluating evidence. The use of judgment in gathering. The use of judgment in gathering and evaluating evidence. The use of judgment in gathering and evaluating evidence. And forming conclusion based on the evidence. And forming conclusion based on the evidence. And forming conclusion based on the evidence. Then the last item, in some cases, the characteristics of the subject matter may be technical. In some cases, the characteristics of the subject matter may be technical. In some cases, the characteristics of the subject matter may be technical. Full stop. And that's the end of that part. That's the end of that first segment. So far, we have tried to understand what is assurance engagement. We have tried to understand the different types of assurances that you can give. And of course, by now we understand the elements of assurance engagement. Please note, somebody, this is an area that is highly tested in our level. So let's make sure that at least we have those details right. Now let's have another subtopic, acceptance and continuance. Acceptance and continuance. Acceptance and continuance. Acceptance and continuance. Now, in this part, very briefly, we want to see before you do an assurance engagement, and by the way, for the purpose of clarity, I want you to note that there is a difference between an assurance engagement and auditing. Please, my people, this is very important for you to note. There is a difference between auditing and assurance engagement. Now, auditing comes first, meaning assurance precedes audit. Now, once the books of account has been audited, somebody can express an assurance so that they can increase the degree of confidence to the intended users of those books of account by giving that assurance, that reasonable assurance or limited assurance. Now, something you need to note, before you start auditing or maybe before you start doing your assurance engagement, it's very important for you to consider what are some of the factors that are very important that I need to consider before accepting this engagement. And if I've been auditing this organization, should I continue auditing this organization or I should quit? Meaning this one you want to see. What are some of the factors that I need to put into consideration, either to accept for the first time or to continue auditing an organization that I've been auditing before? Now, what happens if I know that I've been invited to audit an organization and I realize that I have a close relative working there? Meaning, if I have a relative who is working there, already I have some interest in that organization. If I realize there is a material misstatement that the books of account and this person is affected directly, then I might have conflict of interest where I'm torn between performing my duty and also safeguarding the interest of my relative. Now, what happens if you are auditing an organization and you have already invested in that organization? You have some shares in that organization. It means you are not only an auditor, but also you are an investor in that organization. Meaning, again, you have self-interest. Now, think of a scenario whereby the market price of shares of this company are declining, and already you own more than 5% shareholding in that organization. Meaning already you have a mindset, because of the information that you have gained about what is like to happen, you might decide to make a decision to safeguard your investment. Meaning you are making a decision not to the interest of the client, but your own interest. So it's an issue that I need to consider. Think of a scenario whereby you were engaged before to prepare financial statement on the behalf of the management. Or maybe you have been offering internal audit services. Or probably you have developed the internal control system of that organization and you are coming in to audit. Now, that tells you if you prepare their financial statement or you develop the internal control system and you are coming in to audit, you are auditing your own work. Now, that's what we call self-review. Meaning it is unethical for you to audit an organization that you have prepared their books of account. Because already, if there is any possibility of misstatements that you have committed, and yet you are supposed to demonstrate competence, due care, you might not disclose that. So it's an issue that I need to consider. Before I accept this engagement, are there some factors that are likely to affect my objectivity / independence? Then again, what happens if I've audited this organization for the last 8 years, or maybe I've audited this organization for the last 10 years? Then it means I've altered that organization for the longest time possible. Already I have an element of familiarity. So I need to consider, what does the law require in that jurisdiction that I'm auditing? Can I audit more than 5 years? Can I audit more than 6 years within the same organization? Meaning it's a factor to consider. Now, not somewhere. Subtopic, acceptance and continuance. Acceptance and continuance. On that note, the engagement partner shall be satisfied. The engagement partner shall be satisfied that appropriate procedures regarding the acceptance and continuance, the engagement partner shall be satisfied that appropriate procedures regarding the acceptance and continuance of an assurance engagement has been followed. Full stop. The practitioner shall only accept or continue only when the practitioner shall only accept or continue only when, number one, the practitioner shall consider his independence. The practitioner shall consider his independence. The practitioner shall consider his independence. Number two, the practitioner shall consider appropriate competence. The practitioner shall consider appropriate competence. The practitioner shall consider appropriate competence and capabilities needed. But next, the basis upon which the engagement is to be performed. The basis upon which engagement is to be performed has been agreed. The basis upon which the engagement is to be performed has been agreed. But next, establishing that the preconditions for assurance engagement, are present. Establishing that the preconditions for assurance engagement are present. And number 5, confirming that there is a common understanding. Confirming that there is a common understanding. Confirming that there is a common understanding between the practitioner and the engaging party. Between the practitioner and the engaging party. Confirming that there is a common understanding between the practitioner and the engaging party of the terms of engagement, including the practitioner's reporting responsibilities. Including the practitioner's reporting responsibilities. Including the practitioner's reporting responsibilities. Full stop. Let's have subtopic, preconditions for assurance engagement. Subtopic, preconditions for assurance engagement. Preconditions for assurance engagement. If you can remember what we have just discussed there and the factors to consider, one of the factors we have said we need to consider preconditions. Please, I want you to note, there's a difference between preconditions and factors to consider. Preconditions, these are some of the arguments that we need to have even before we start engaging. Precondition number one, the roles and responsibilities of the appropriate parties. the roles and responsibilities of the appropriate parties are suitable in the circumstances. Are suitable in the circumstances. Meaning, we need to agree on our roles. What is the role of the management? And what is the role of the practitioner? So we need to agree on the roles. This is the first precondition, that the role and the responsibilities of the appropriate parties are suitable in the circumstance. Number two, the underlying subject matter is appropriate. The underlying subject matter is appropriate. The underlying subject matter is appropriate. Number three, the criteria to be applied in the preparation of the subject matter. The criteria to be applied in the preparation of the subject matter information. The criteria to be applied in the preparation of the subject matter information are suitable. The criteria to be applied in the preparation of the subject matter information are suitable. Next, the practitioner will have access to the evidence needed. The practitioner will have access to the evidence needed to support the conclusion. The practitioner will have access to the evidence needed to support the conclusion. Next, the practitioner conclusion in the form appropriate. The practitioner conclusion in the form appropriate. The practitioner conclusion in the form appropriate will be contained in a written report. Will be contained in a written report. The practitioner conclusion in the form appropriate will be contained in a written report. The last point, the purpose of the engagement exists. 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 Meaning, now those are the preconditions. Meaning, preconditions are those things that we need to agree. Let's agree between me and you. Do you understand what is your responsibility as management, and do I understand my duty as an auditor? Number two, is there appropriate subject matter? I'm coming into audit your books of account. Those books of account, are they available? You want me to evaluate the efficiency and effectiveness of your internal control system. Are those internal control systems there in the first place? So we are trying to agree on some factors even before, meaning I'm working on the preconditions. Now, I want to base my evaluation on a given benchmark, that is criteria. Is that criteria available? Because I want to confirm whether the subject matter is in conformity with the criteria. Is that criteria available? Meaning, I'm trying to set some precondition that we need to agree even before I start working on your account. Now, let's go to the last part. Work performed by a practitioner's expert. Work performed by a practitioner's expert. Work performed by a practitioner's expert. Now, you want to engage an expert to help you. Remember, it's possible that you might be engaged to work on a subject matter. And remember what we had just said, some of the subject matter might be a bit technical. Now, meaning at some point you need to engage a lawyer on some instances, especially there was a acquisition of land maybe somewhere. Maybe there's those contractual documents that were signed, and you need to engage maybe a lawyer. Or maybe you're working on issues of land, real estate. So you want to engage a surveyor. You're not a surveyor. So meaning, before I use work of that expert, what are some of the factors that I need to consider about that work of expert? So factors, work performed by a practitioner's expert. And that note, when the work of a practitioner's expert is to be used, when the work of a practitioner's expert is to be used. When the work of a practitioner's expert is to be used, the practitioner shall, number one, evaluate whether the expert has the necessary competence and capabilities. Evaluate whether the expert has the necessary competence and capabilities. Number two, obtain a sufficient understanding. Obtain a sufficient understanding. Obtain a sufficient understanding of the field of expert. Obtain a sufficient understanding of the field of expert. Number three, agree with the expert. Agree with expert on the nature, scope, and objective of expert work. Agree with expert on the nature, scope, and objective of the expert work. Next, evaluate the adequacy of the expert's work. Evaluate the adequacy of the expert work for the practitioner's conclusion. Evaluate the adequacy of the expert work for the practitioner's conclusion. And ladies and gentlemen, that's the end of that part. That's the end of that part. Remember, we said assurance engagement is categorized into two, whereby we have said we have assurance engagement and non-assurance engagement. We have just finished assurance engagement. Now, in our next class, we'll be working on non-assurance engagement. So, right subtopic, non-assurance engagement. Non-assurance engagement. Now, that will be our picking point in our next class, possibly tomorrow. So, for this time, thank you for your time. The request is stop there. We are almost done. It's almost 10. There isn't much we can do for the remaining 8 minutes. So we'll stop there for today. Thank you for your time. Thank you for your commitment and sacrifice. I do like telling stories, but unfortunately today we started a bit late. Sikupata time ya kuwapea story, but next time I want to promise you I'll give you a story. So thank you for your time and I wish you a lovely evening.